Hey everybody, this is Dr. Tom Carr, aka Dr. Stocks of drstocks.com. That's drstoxx.com. This is our website. I was going to say it's our old website, but it's actually still the website that we're using. We're building out a very new website that has a lot more functionality. You're going to like it a lot. Everything is together on the same site rather than going to different sites. And it's going to look a lot better. In my opinion, it does anyway. Professionally done. But anyway, this is where you want to go. And if you want to join me and a bunch of great traders in the live trading room, which is coming, this is where we're coming to you from today. Click the subscribe button, scroll down to the live trading room. I've been in there every day, every market day for over 5 years or over 6 years now. We're in our 7th year. And I also launched about a year ago the live options room, and you can add that one on to the live trading room at a 40% discount. Okay, so let's look at the charts. So we had a great day yesterday. The market was actually broadly down 60%, 58% of all stocks were closed red yesterday, but we had one of our best days certainly best day in February and one of the best days year to date, largely because we had we caught the metals bounce back quite nicely, some of the miners as well. We were in small caps, we're in Dow Jones, and a bunch of other things that did really well yesterday. A lot of those things that did well yesterday are giving it back today. Not all of it, fortunately. We still made a lot more money yesterday than we've lost so far today, but it is how trading goes. It's always 2 steps forward, 1 step back. I like to call this back and fill. It doesn't look to me like it's concerted selling or panic selling. The VIX is not doing very much today. Where is the VIX? Now that I'm thinking of it, it's right there. It's up 2.25%, but that's not huge, right? Just a little green candle down there off the 200 period moving average for the VIX. So there's no panic out there. Volume is pretty low right across the board. And if you look at the S&P, if you look at the NASDAQ, if you look at the small caps, the Dow Jones, you're seeing a lot of good strength, right? So it's just a rotation market. I've been saying this, it's a rotation market all year long. Pretty sure that's the case because in part, we've got midterms on the horizon, in part because we still have uncertainty about tariffs. We've got metals flying up, we've got metals flying down. And there's just a lot of market weirdness out there. And, you're seeing like high risk sectors trading higher with staples, with utilities, sometimes with bonds, which are starting to come back a bit. And so you don't usually see those things together in the same day. And that just means that the market is all hot on one sector one day, and then it's hot on another sector another day. And the best way to trade this is to find the ones that they're hottest on, avoid the ones that are getting consistently hammered and showing weakness and running up against resistance and not breaking out. Stay away from those, but stay into the ones that still have good upside, still seeing inflows on a more consistent basis. And then take a variety of those so that you have some diversification. That's pretty much what we're trying to do. Are we doing it perfectly? No. Are we making money this year? Yes. In fact, it's actually one of the best starts of the year. January was one of our best months overall in years, and we're doing okay so far here in February. All right, well, let's look at the market, and I promised my group that I would take some chart requests, so I'll try to get through this as quickly as I can. I do need to get back to the trading floor. Let's take a quick look at the S&P, and you can see we've got a little bit of back and fill today. We rallied up above the high of yesterday. That's a good sign. I think that might have happened pre-market, and then it came right back down, and now we're back inside the range of the previous day. This is a classic reversal bar pattern, but it's on lowish volume, and we're not seeing panic selling. We're not seeing signs anywhere else, really, and we're not up against resistance either, and I think this is just what I call back and fill. We've had a really good run off of that, off of the Friday opening gap down that rallied all the way up, all the way up. That's a long way to go for the market. Added to it yesterday, which is a confirmation sign, and just a little bit of profit taking going on today. I think that's really all it is. It's tempting to think about maybe adding on some bearish inverse funds. I'm not so sure that's the best move. We still may do that before the bell rings today, but it's not really what I'm thinking right now. Now, we're also long the Dow Jones. It was a big breakout day on Friday, confirmation day yesterday, and some more upside today, just not a whole lot because the market itself is kind of doing some weird stuff. So we've got already today more volume in the Dow than we had yesterday. And yesterday was a little doji candle at the top of a big range, big green stick, I call that. And that's a very good sign. The Dow is, for one, there's only a couple of mags in there, and the mags, and Apple is one of them. Apple's been outperforming. So the Dow is a little bit more of a safe haven than the NASDAQ 100, which has all the mags at the top, and it's a weighted index, and they're underperforming as a group. That's number one. Number two, you've got some energy plays. Energy is a good sector. You've got home builders, you've got healthcare, you've got drug makers, you've got insurance plays, and a lot of other, individual but big companies, of course. And you've got really good diversification away from tech, which I think is really kind of the key right now. CapEx is just too much. These big companies, hyperscalers, have to go into debt. They have to sell bonds. They might even have to sell shares, and that's just not good, right? Anytime you get that dilution of earnings per share, not always such a good thing. The increase in debt, not a good thing. Having to scramble to get new loans when interest rates are still kind of high. All of that is not so good. Squeezes margins, scares investors out of the company for a while. And that's why you've got Microsoft down, you've got Netflix down, you've got Facebook down, and on and on. So I want to stay away from that group in general, the big hyperscalers, the data centers. You can play individual names now and then. I think some of the nuclear plays I'll look at in just a moment are setting up quite nicely. But in something like VRT, which builds cooling systems for data centers, right? The picks and shovels guys are also good plays. But these big guys that own the building and they have to pay all this money for all that energy and equipment and server space and quantum computing stuff, it's just not a very good investment right now. It will be probably 10 years from now, but maybe not now. All right, so that the Nasdaq, for that reason, also is a no-go zone for me. So we had this big breakdown, right? So the Dow Jones is going up to new all-time highs, and the Nasdaq is breaking down through support. Not a good look. Not a good look for the Nasdaq or tech. So three big red bars on heavy volume. Spring back up on Friday, like everything else was all up on Friday. Follow through yesterday. Starting to look a little bit better, but now we just are up against the underside of that support trend line and the 50-period moving average, and I don't think it's going to get much higher than it already has. So is the next move going to be a rollover? Maybe not, but I think probably the path of least resistance, and I've been saying this over on StockTwits and so on, is a little bit of a higher low, and then some fluttering around. And I've been saying buy March and sell April. Or is it the other way around? I think it's sell March and buy. It's sell March and buy April. Yeah, sell March and buy April. But anyway, it's just right now in terms of long and throwing all your money into the mags and buying a beaten down stock like Netflix. No, just slap yourself in the face if you're thinking those things. And let's move on and find some better charts, right? So the Russell 2000 is doing great. We bought ahead of this breakout. We've been riding this little breakout for a while, moving up our stops, protecting profits. It's just been a nice trade. Small caps are beneficiaries of a weakening economy, a lowering of the job data, which will probably get confirmed tomorrow. And that's going to be a big deal, and it's probably going to be a big deal. But you're going to see small caps and rate sensitive issues like homies, like utilities. We're long utilities over in the options room. You're going to see those guys do well because if the jobs data is weak, because that means rate cuts are likely coming sooner and bigger than expected. So we like the small caps. We like the Dow. I'm kind of neutral on the S&P, but it doesn't look bad to me at all right here. But I'm definitely saying avoid the NASDAQ. Now, I updated my Bitcoin map. This was the earlier version of it, right? I said way back here in November that it was going to hit 75. I didn't hit the timing right, but I did hit the target right. It just happened about a month after I expected it to. And then we kept on going down. It got worse and worse. So I do think that we're due a little bit of a bounce in Bitcoin, but I'm afraid to say, given what I'm seeing right here and the sentiment and the volume balance and other things going on, and I took a look at some of the cycles too that are projected out, and they're not looking very bullish. So a weak bounce likely. I did say that would probably start at the end of the month. Maybe that's the case. It's going to be a weak bounce, and that would be a very good place to get short if I'm right about that. If we get this big bounce up to 90K in March, which I don't think is going to happen, then yeah, you can short it up there, but I don't think, and I would rather ride this up as a long than ride this down as a short if it gets all the way up to 90K, especially. But if it's coming down here to like 65K as a bounce, yeah, I'm going to get short. Ether to me, it's just I just take it off your radar, take it off your screen. I don't see it bouncing or getting back to its former glory anytime real soon. I mean, it could be down at 800 by May. That's a very bearish read, and I'm not putting any money on that at all. I'm just saying that that's to me what it looks like here, just using standard technical analysis and angles of trend analysis, and so on. All right, so I do like gold. We've got gold in the live trading room, and we've got silver over in the live options room. Gold's doing pretty well. So it had two big updates. The crash on that Friday, scary crash for the metals, was not as bad for gold as it was for silver. It's like a 30% haircut for silver off of some extreme highs, obviously. And I did not play that very, very well. And I still held on to some AGQ despite that. And I'm back up to about where it was. And I actually have some from way back in November last year that was a lot lower. But still, it's been a rough ride. It's been a scary ride. And it's the kind of thing where if you have a small amount and you can sit through all these roller coaster rides, you'll be okay. But if you're trying to leverage this for the big home run, I wouldn't. Not yet. No, not yet. However, all of that said, gold has its own macro tailwinds that are still strong and they're not going away. Silver has an even bigger set of macro tailwinds, which are still strong and not going away. Copper, the same thing. So I think from here to the summer, you've got a good trade if you can sit through and stomach the churn and upside down kind of stuff that we've seen lately. If you can get into a little bit of the metals and some of the miners, I think you'll be okay. And that's kind of what we're doing, right? We're not going crazy on these guys, just using half position, quarter position, or less. But we want to have a footprint there because it's just supply and demand, economics 101. Okay, those are the only sectors I wanted to look at. Let's take a look at a few more down here. So biotech looks very good, nice and tight up against the resistance trend line after getting into the apex. We're above the 50-period moving average. We're in the pink zone of an uptrending LRC, and all that looks good. We are long Labu. Last time I checked, we had some profits. I think that's still the case. I do also still like the semiconductors. I know it's probably going to flatten out here or roll over for a little bit, give us a little bit of a higher low. But the semiconductor space is the semiconductor space and the storage space, and there's some overlap there with like Micron or AMAT. Both of those spaces are kind of trading to their own drummer. They have a own unique set of forward-looking earnings multiples. They've got what is it called? CAGR, right? The growth rate going forward. Both of them super strong. And most of the big players, including NVIDIA and Micron and Seagate and so on, the big players are printing record revenues, and that's not going to go away anytime soon. And these are the guys that don't have to worry about buying a data center and funding it with energy, and they're not going into debt, and they're not spending CapEx twice as fast this year as they were last year. So semiconductors, the small set of memory plays that we've talked about many times in the past, I think those are good. Software, I'm not so sure about yet. I know it's made a nice little bounce, but it's a dead cat bounce. I'll show you this in just a minute. We were talking about this in the in the live trading room earlier today. So it's just, sequence of higher lows. Sorry, lower highs and lower lows, and it's just all net all the way down. And here's another, probably going to be at a higher low. I mean, a lower high after a lower low. And what you're looking for to consider this at the end of the big crash in software is a higher low and then a breakout of the most recent pivot high, which is being set today, I think. So if this is a rollover today, you want to let it go 3 or 4 days, see if it prints a higher low, and then it has to run up against and above and close above the high of the pivot high, the most recent pivot high, which is right here today. And we're not there yet, right? None of that has happened yet. So this could just be a dead cat bounce. It could be another in a long sequence of lower highs setting another lower low, and you don't want to get caught in that. Okay. The solar space is still good, still up at all-time highs. I think the quantum space looks very similar to me to the semiconductor space. They should be okay. The robotic space is also in the same boat, not too bad. The homies are strong, right? Strong and getting stronger. That's a big green stick today. I didn't know they were so strong today. That looks really good. Really, really good. Material space is bouncing back again. They were a little bit weak for a couple of days, now bouncing back again. You've got some miners in there, so that's good news. Energy is very, very strong and keeps going up. The banks have been a little bit mixed, and I would stay away from the big banks, which is XLF, and focus more on the smaller banks, the regional banks, KRE. Here, it's up here. Yeah, this is, now I know it's coming back in today, but this is still very strong breakout. And all that volume coming in on the breakout side, that's not going to go away anytime soon. You're going to see some dip buyers probably come in before the end of the day. All right, so those are the spaces. Let me take a quick look. Oh, I do have a list of stocks that have triggered Alpha Gold alerts. I put them in here. I used to do this for a while, and then I realized, hey, these guys as a group aren't really all that great. So I stopped doing that, and then I decided, well, maybe I missed something. Maybe I'm missing something. So I put them in this watch list here again, and all the AGAs from last week and this week. I mean, sometimes they're duplicates. I didn't note those. For the most part, I'm not putting the big mags in here because you're going to see Apple and Google and Amazon show up regularly. But you can see here's one of the memory plays, not looking so good today. Intel actually stopped us out yesterday, and it's big red stick today. I don't know what's going on with this thing, but this is coherent, and it's not bad. Actually, it's not bad. So the Alpha Gold alert came in somewhere in the middle of that big green stick, and it's been upside ever since. BE, which I like for other reasons, I have it on my greens list because of the breakout, the retest, and it's not doing too badly today. Triggered an Alpha Gold alert today. We actually took an Alpha Gold alert in GM, and that stopped us out. So not happy with that one. APLD is a success, right? Because it came in just above the 50 on that green stick. Alpha Gold alert on Friday last week, and it's only been upside from there. So that's a rare win for the Alpha Gold alerts. All right, BSX came in just recently. This is kind of intriguing because the valuation here is very good. And I want to bring you over to TipRanks in just a moment. And TipRanks, the analysts there are very high on BSX. And it's already been 3 days, which is kind of the 3-day rule since earnings, the big crash. However, I just told you that if you've got a zigzag down lower, like the software space that isn't yet printing a higher low and then a breakout high, it's probably best to just avoid it. And that's what we're seeing here with BSX. We're not even near the breakout. We're not even near a bounce yet. So it's still in the downtrending mode. But anyway, keep an eye on it. You never know. Okay, now, the last thing I want to do, and then I'll take some chart requests. And if you want to go over to the main room, right? Trading main room, and start ticking in a few ticker symbols for me in the bar there, I will take a look at those if there are any. If you don't have any, that's fine too. We'll just move on. Okay, so TipRanks is a subscription service. You have to pay. They do have some free content, and it's good. It's good worth kind of poking around here. So this is how I use it. It gives me several things, but let's first just put in a stock, right? If I'm interested in a stock, well, let's say, for example, I'm interested in either NVIDIA or AMD. And I haven't done this recently, so I'm not sure what the numbers are going to look like for these two. But let's say I only can buy one of them, and I'm not sure which one to buy. Well, there are lots of ways you can analyze those. I usually go to Market Surge and look at the IBD metrics, and I look at the technicals, and I drill down to the hourly chart and the weekly chart and so on. But another thing you can do is you go over here to TipRanks, you type in NVIDIA, right? Click on it, and these are the things that I'm looking for. So I first leave all analysts toggled on, and I want to see, are they on a strong buy or not? If it's anything less than a strong buy, a moderate buy is the next one down, I'm not interested, or I'm going to move on. I also want to see that their target price is well above current price, so they've got some good upside expectation. 37% is pretty good, right? Especially for a big blue chip stock like NVIDIA. And then I scroll down and I start looking at how many of these guys, how many of these analysts are at 5 stars. 5-star analysts are the ones you want to listen to. Anything less than that, just forget it. So, bunch of 5 stars, all 5 stars. And you can see what their trading record is. Every time this James Schneider of Goldman Sachs gives a thumbs up to a stock, he reiterates a buy, or he gives a new buy, or he upgrades it, 67% of those go on to make money then next year, and at an average return, including the losers, of 23.3%. That's pretty good, right? That's why he's a 5-star analyst. He's ranked 105th out of, no, where is he? He is ranked almost 500. He's in the top 500 of the 12,000 Wall Street analysts that pull in far too much money than they're worth, because most of them aren't worth a thing, really. I mean, when you look at the 1-star, 2-star analysts and how horrible their recommendations are, you'll know it's a scam. But there are some good guys, and they usually are at the big houses, right? Goldman Sachs, Cantor Fitzgerald, Bank of America, Morgan Stanley. Those are good guys to listen to. Jefferies, RBC Capital, Piper Sandler. Now, how do I know that those are the big houses? Well, there is a way you can figure that out. If you have a higher subscription to TipRanks than I have, you go to the experts, you go down to top research firms, and they're not going to show me because they want more money from me, but they will tell you this firm here is the best in basic material stocks. This firm is the best in consumer cyclicals. Now, last year I had the higher membership, and I know that for technology, it's Jefferies. For financial, it's RBC Capital. So, and when you start seeing RBC, Jefferies, Oppenheimer, Piper Sandler, and so on, you start seeing these same names show up again and again in these different groupings, these different industries. And when you see that firms show up with the top 5-star rankings, 5-star analysts, and you can get those guys right here, right? Here's your top 25 analysts in the country. Are these? No, I'm sorry, those are my experts. I want to go to top analysts. Here we go. These are the guys with the most number of stocks covered, and the best track record, and the best success rate overall of the 12,000 people that are followed, right? So H.C. Renwright, RBC Capital, Citi, UBS, BMO. You're going to see a lot of the same firms showing up. All right, so back to NVIDIA. NVIDIA, strong buy. That's good. Big upside price target. That's good. 5-star analysts. Good. All right. So three singles there. Maybe even a home run. Now let's compare with AMD. All right. Well, also strong buy. That's good. Also a big upside, maybe a little bit lower than NVIDIA, but 34% is in this ballpark of 37%. Let's scroll down to see if and AMD also has 5-star analysts. Here's a 4-star, most recent, right? These are ranked by most recent, but 5, 5, 5, 5, 5, 5. Okay, so this is not helping me at all. This is not helping me at all. They're both pretty much equal, right? So I would have to go somewhere else, but that is an example of how you can take 2 stocks, you put them into the same system, you get the same analyst giving out their readings, and then you'll see sometimes it's really clear. Let me do another one here just to give you one of a that's maybe not so good. Netflix. What is Netflix looking like? Okay, here's a moderate buy. It has a big upside, 37%, only maybe because the stock is knocked down so far. And look, here's a 2-star analyst, a 1-star, a 1-star, a 2.5-star, 3-star, 2-star. Okay, so Netflix clearly not nearly as strong per TipRanks as NVDA and AMD. Let's do one more. Let's take a stock that we're in right now, which I don't think I've done this for any of our stocks. How about SanDisk? SanDisk. We just bought SanDisk this morning. I just got caught in the top of the daily range, and of course SanDisk has come down with the market itself. But all right, moderate buy, not the strong buy that I would like to see. Pretty good upside, 15%, but not as good as the other guys that we saw. And there are a bunch of 5-star analysts down here, so that's good news. And if we look at this. Mark Newman, 5-star analyst from Bernstein, has an 81% upside. That gives you pause, right? Because it's only 500 something, 550. Melissa Fairbanks from Raymond James has 725, and she said this just at the end of January, just a couple of weeks ago, a week and a half ago. Alyssa Merchant from Citi has a $750 target. Okay. Thomas O'Malley, 5-star from Barclays, has a $750 target, and so on and so on. Okay, so some of these recent ones are giving some big upside price targets, and maybe this 15% is not that representative of what the market is actually thinking about the stock right now. But I'm justifying myself for having bought it and not coming to TipRanks to see that it was a moderate buy rather than a strong buy. All right, so that's enough of that. Let me go back to charts, and I will see you've got some ticker symbols in here for me. Okay, MDB. I'll just take them as I see them. So this was on a list of stocks for some reason, and I'm forgetting why it was there, but it was a chart of interest. I put it on one of my watch lists. Okay, so we are in an uptrend. That's good. Let me put on the 21 EMA because I don't have it on here just yet. Where is it? Oh, TradingView keeps doing this thing to me where if I don't save it and then log out and then log back in again, it doesn't hold my save. So I'm not going to worry about that. But let's just look at some of the technicals here. Let's go to the resistance trend line. That's the one over the top of these sequence of lower highs. Of course, the sequence of lower highs, it's not really what you want. Short term, this is not trending higher, it's trending lower. That's not so good. It did have a big gap up on earnings, but it has since closed that gap. That's not so good. So a gap up on earnings is very good, a revaluation of the company, but it's got to hold that space open. If it doesn't, it means that the market was wrong, overvalued the company. Now it's going to get knocked back down. The good news is it closed the gap, and for 3 days it's been moving higher, and that's pretty good momentum right there in the price. And I kind of like where the MACD is, the stochastics, and even the cycles. The long-term cycle is down at the bottom, starting to turn higher. So I would have to say I would give this a hold rating, not a buy. If you're not long already, I would move on and find a better setup, and there are plenty of better setups out there. ONDS. Yeah, okay, so I like this one better than the one we just saw, right? MDB came all the way down below the linear regression channel. It had moved quite far away from the 50-period moving average, and it bouncing up nicely, which I like, but this one has, to me, a better, more of a pullback setup, my favorite kind of setup, just as it did back here. So it's got a history of doing the pullback setup into the pink zone and then not rising like every day and not going straight up and not giving you the exciting trade that it normally would be. It did move nicely, but it's come all the way back down. But it does seem to me like this one is getting ready to make a breakout attempt above that resistance trend line. It's getting stuck at the 50. I assume it's going to come back down and test this recent low down here around 840. So if you are already in, you want to set your stop below that level. You don't get stopped out. If you're thinking about buying it, then make sure that you are okay with hanging on to it from 978 down to 840. I wouldn't be. So, but that's just me. But I do think it's probably going to double bottom before it starts making an attack on that trend line. That's just what I'm seeing there. Okay. You guys have a few here. We're not going to get through all of these, but let's do a few more. All right. So figure was on my it was on my greens list for a while because it made this nice breakout move, and it came down and formed this little pullback with a reversal bar, followed through 2 days later, and then it's been all downhill from there. That's just an ugly chart. I know that there was some kind of bullish sentiment coming in to this when it was IPOing back in September, October, but I haven't seen anything since then. Not at all. I don't think funds are buying. I don't think people are trading it. No one in my pro trading group has mentioned it for a while, long while. So yeah, and I don't like this big slam, right? When you have this heavy volume, straight drop down, we can call that a waterfall, just call it a crash, right? It's a price crash. Then you're going to have trouble getting back up, right, above that. Why? Because people bought up here, they've been holding, bought up here, holding, bought down here, holding, bought down here, holding. They're all underwater. So as soon as that price gets anywhere near where they bought it, they just dump, and it goes right back down again or can't get through. And you're going to get the sideways churn for maybe 2 or 3 weeks, maybe longer. You don't want to get stuck in a stock that just rides the lows and gives, in a tight trading range for 2 or 3 weeks. It's dead money. So find something better that is already trending up and looks much stronger than this. This is not looking so good. Siri, I haven't looked at this one in ages. All right, so downtrending stock, the 50's below the 200. The LRC is falling. You don't want that. Big up on earnings, and it totally closed the gap. That's not good. Yeah, it's a nice looking bar today, kind of an inside day bar on a weak market day. Not a bad thing at all. But yeah, there's nothing here in the chart. I don't know of any. I just haven't seen it mentioned by anybody anywhere, either positive or negative. And I'm not opposed to off the radar charts. In fact, that's kind of what we're looking for these days. But this to me is the kind of chart that really needs to have a good change of sentiment, but through a catalyst of some kind, a news event or a big earnings. It doesn't look like earnings were that great since it was a miss, right? The red thing here means a miss. Yeah. So the only good thing, I will say this: it did break out multi-month high. That's what I would call a blue sky breakout. Very good volume on earnings. That's not a bad thing. And it has since pulled back to the 50, and it's bounced off the 50 today. So those are little bullish notes there that doesn't make this a complete get rid of it, get out, sell instantly. But I wouldn't be a buyer right where it is. If I bought it, let's say I bought it yesterday at the 50-period moving average and I've got a little bit of profit today, okay, yeah, it's worth hanging on to. Put your stop below yesterday's low, and then tomorrow put it below today's low and trail it higher if the market will let you. But all right, so this is a better looking chart. Now you've got earnings coming up, looks like tomorrow. Yeah, day after tomorrow. So be careful of that. It's a pharmaceutical company, so they sometimes can come out with earnings that are weird and the market doesn't care, because usually it's about updating their pipeline, and that's what the market is looking for. So if you know the pipeline and have good confidence they're going to say something good, then you can hold it over earnings. But generally speaking, I don't play earnings in general as a trader. A holder of earnings in my investments, but not my trading positions. And I don't really get too involved in the biotech sector because and the way I play biotechs is usually with Labu, right, or XBI calls. But individual names, yeah, I've done it before. I'm in Cogent right now, which is a biotech, and I kind of like it. It was had a great day yesterday, not so good today, like most of the market. But you really got to know what you're doing. But all of that aside, this is a very nice looking chart, right? It's a strong uptrend. You've got a big gap up here on something, not earnings. Came down into the gap a little bit, but it didn't get very far, and now it's just up, nice up. You've got this nice coherent 45-degree angle pullback into the pink zone of the LRC. That's your buy zone in an uptrend, and got up to the RTL where it knocked on the door and didn't get through today. I like this though. If it weren't for earnings, I might even think about buying this one. And I like it so much, I'm going to put it on my greens list because it's not one that I know. And we'll see how it does on earnings. But yeah, thank you for that chart. That's a good one. This has everything that I would like in a chart. I can't see the volume balance too much, but the MACD is starting to pinch a bit. The stochastics are perfectly placed right here, all the way down below the 20 and starting to pinch. And you've got the short-term cycles bottoming out. The long-term cycle might give it a little bit of a headwind for a while, but it is, it's on the way down, I guess we can say. And maybe the 3 shorter-term cycles can overcome the longer-term cycle there. But I do like it. I like it. Okay. AA is a aluminum stock, and we haven't traded steels or aluminum when we've been focused so much in the metal space on copper, steel, copper, silver, and gold. But this is also a very nice chart. I really like this one. In fact, I'm going to add this one. I'm going to steal it. Thank you, and put it in my greens list. Okay, so why? We're past earnings. We've got a volume balance here that is, I don't know, leaning bullish, certainly bullish here, bearish in this section, mostly bearish here. Maybe it's reversing. So volume balance is a little bit mixed, but beyond that, stochastics, fresh buy signal, MACD about to give us a fresh buy signal, long standing cycle all the way down to the bottom and starting to tail higher. Breakout day yesterday, confirmation day today. Good. And it's in the metal space, which has all kinds of macro tailwinds. So yeah, I like that one a lot. You could buy it, you can hold it, you can add to it. Now, where would you put your stop? You'd put your stop underneath yesterday's low, or even down into this little gap here, 57.50 or so. It's not a big moving stock, so the risk isn't that high. And your target, not always so easy to hit a target when you've got, or to determine a target when you've got a stock up at 52-week highs or all-time highs. But what you can do is put in a trend line, and however long it takes to get there, 75 maybe is your target price. Let's do 2 more here. PACS. All right, so this one's been on my greens list for a long time. I was in it and then out of it in this little area right in here. I think I had one trade where I took a small loss, and I had one trade where I took a small gain, and then I just kind of set it aside. I don't know why, but it's gone up, of course. But I kept bringing it to the room, maybe both rooms, and I know that there are members in the rooms that are long this one, and it looks good. It really does look good. It's a nice rounded bottom pullback. I don't mean that to be red, but it just is red for now. Nice rounded bottom pullbacks. Remember, rounded bottom pullbacks or rounded bottom consolidations or rounded bottom bases or rounded bottom bottoms are much more bullish than anything V-shaped, right? V-shaped patterns tend to peter out, but the rounded bottom, because it just took its while and kind of getting there, and people are getting in, and the weekends leave, and the more people get in, and just builds this momentum base, volume base, and then you've got some stronger holders that have been in for a while, and then it has a time to move higher. You've got the big power gap, nowhere near to closing that at all. That was on earnings. That's a good sign. And then test off the 50. This looks very good. I mean, it's not that far from where it bottomed out. And so you could buy it, you could add, or you could hold if you're already long. Now, I would put my stop probably underneath the range lows down here about 34.37. That's a little bit of a wide stop, or to be a little safer underneath last week's low, about 35.20. Okay, I do like that. Let's do one more though. CMCSA. Well, I'm glad this wasn't. We had our internet knocked off yesterday for several hours, and we are with Xfinity. Who owns Xfinity? I'm blanking now on that. And is it I don't think it's Comcast. And if it is, slap me because I should know that. Anyway, yeah. So very good, very good. Now it's a little bit extended up here. It certainly would be a hold, not a buy today, but it's in the right space. This communication space, XLC, has been doing well, and it's got the breakout move from here, right? Got all this coiled up going on underneath the 200 breakout, up, 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 up. The volume's tapering off. That's usually what it does after it's been extended for a while, and it's just the volume balance is just as good as it gets, right? So the next move from here. So you've got this. Is that where it is now? Yeah, that looks like a very significant. There's kind of a price shelf right there, and it's peaking up above it, but I don't think that's exactly where it is. I think you've got some intraday highs that are there. You've got some intraday lows. So this is what we call a support, an SR flip, right? It was support, 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 and then it's resistance, 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 and now it's back up against resistance again. Is it going to get through? Well, yeah, that momentum in the price and the volume balance suggest that it's just going to slice through like butter. Now, what will happen typically from here is that it will get up above, it'll close maybe today, confirm in the next couple of days, and then it will just sort of lounge around up there, kind of like BE did. Lounge around just on top of that. Maybe it goes up a few days, down a few days. So if you have been long for a while, you've got some profits, yeah, hang on to it because it's probably going to do another big run. And I think the next target is going to be up here at 34, right? Resistance, right? Resistance, support, resistance. So 34 would be your next target. And if you want to hang on to that level, that's fine. But if you've been in it for a while and you're a trader, to me, I would take my profits and look for something that's just now fresh breaking out. Guys, I've got to let you go. Probably went too long, but that's okay. I will produce the video, put a link in both rooms. God bless everybody. Have a great rest of the afternoon. And we'll figure out what's going on in the market here in the last power hour. All right. See you in a little bit. Bye for now.